Good morning, good afternoon, good evening. Wednesday, the 7th of February. I think today should be exciting. All right, we have nothing really on the calendar to look forward to other than bond auctions later on. And that really doesn't apply to us for the immediate future. Okay, so as far as we're concerned, the next hour is clear sailing other than some oil-related news. And then near the top of the hour, we'll have some speeches to contend with, right? This is something to be aware of. The last few bill auctions have created volatility, so we have to be aware of this, right? Just take a note and be cautious of that time. Right, so going to check our daily, like we do every day, right? If I look at the bigger picture, we're inside of this range right here, near the 61% retracement of that bigger range. Currently, we do have this pennant or flag, which could be referred to as a halfway pattern. And so the destination to this is somewhere near the 630 area. Until that fulfills, anything can happen. And as such, when we're looking at just today compared to yesterday, we're making higher highs and higher lows. And the current candle is bullish. And so we have to see why is this bullish and what's its capacity to remain bullish. You know, what would ultimately be the goal of this bullishness, right? So we can start to dive into this on an hourly scale. And then on an hourly range, the first thing you want to do is highlight your ceiling, so that becomes a critical area. You need to break that to extend upward, right? You need to highlight your floor, right? And then even that could be a lot more discretionary than most people think, right? So as long as you're comfortable with the range and you know what to do if you break the range, you have a plan, right? And so within this space here between the floor and the ceiling, we then go down to a 5-minute chart, and then you start highlighting support and resistance that's clearly visible, to your mind's eye, right? Stuff that you see price reacting to a few times already, right? Stuff like this, these levels here, these levels here. I'm just anticipating price reacting to these levels again and again and again. And then because of that expectation, this starts to look like a ladder, and the ladder becomes in our mind action points, right? These rungs on the ladder become a place where you ask yourself, do I want to get into this trade or do I want to get out of this trade? Right, so they're static, they don't move, right? The lines don't move, but the price is going to and from the lines. And the static is good, but it's not good enough. I'd rather have something that's dynamic and I can actually move this about. And then with this moving, it's like a unit of measure, like a measuring tape. I can measure the actual moves that are happening and understand what's underway and behave accordingly, right? So when I see a sideways market in my mind, I can exploit this. When the market is going up and down the ladder, ideally what's happening is it's moving through these boxes. And the average distance between the rungs on the ladder are the average box, right? So the distance is similar. The positioning is discretionary. And as such, I'm using this, like I said earlier, to measure what's happening right here, right now, right? We're moving away from that swing, and we have done so one standard deviation already. And because of that unit of measure, and looking left, we see support. There's a high probability of a bounce right there. And now we have this bullish bias. We have these rungs on our ladder that we're testing, and I want to buy this particular rung right here. Right. So I bought it. And now if I'm wrong, no pun intended, I end up in this lower box. And that entitles me to trying my assumption again, testing my assumption at this next level of support. Right. So I know I want to be buying support. I know I'm bullish. The box just gives me a area of safety or security in which I can feel free to do what I need to do to make the money that I see is available. All right. So stuff like this, you know, we're just looking to our left and trying to find areas that the price reacted to in the past and not predicting the future, but it gives us a pretty good clue that if the price gets here again, that's a possible trade, right? So if the price comes here, I'll have the money and I'll have the plan and the conviction to take that trade, like so, right? So if it pushes even lower, I'll put even more money there, right? Let me zoom into this area so we can see what we're actually up against. Let me remove this. Right, so I put 2 clicks in this upper box here, or sorry, 1 click in that upper box, and now I have 1 click in this lower box. Right, I'm entitled to 4 or 5 clicks per box. It's actually 4.5. And so sometimes I round up, sometimes I round down. Right, but just to reiterate, from the beginning, we want to look at the daily. On the daily, today compared with yesterday, we have a higher high and a higher low. We have a green bullish environment, and it looks as though it's trying to get even more bullish. If you measure the day's work so far in the last 16 hours, since the day's been opened, it's been contained to 35 pips or 4 boxes. The average day should be in the neighborhood of 68 pips, according to the average range. And so we're expecting this to extend upward towards 68 pips, right? So that's kind of the idea. Now we look at this on an hourly scale, and within the hourly scale, we start to highlight a floor, right? Area of support, a ceiling, area of resistance. And because we're contained to this, we then go look at a 5 minute to understand where the action points need to be, right? So those are intermediate levels, right? Levels that are within the outer ranges. And then inside of these levels, we take action, right? This is what we're doing here. And so it's a top down, and the top starts on the daily because of a specific group of people that's controlling or that cares for the daily candle close. And then we take that bias and analyze it intraday because that is a different group of people that care for, price movement during the 24 hours. And so 2 groups of people, different intentions, they may have a similar goal, right? A similar destination. If we can align, 2 time frames, oh, that's productive. That helps us build a position with a ultimate goal. And that's what we're doing here, right? So I just took a second trade as we're approaching this level. And here's my third. And if I can, get my way down here, I'll put in even more money to work, right? So I expect a market to remain bullish until we start making lower lows, in which case it would prove to me that, I need to change my bias. Maybe we're not trying to go up, but instead we're trying to go down, right? So how much of this heat in the kitchen are you willing to take on? Right. So typically the strategy allows me to exploit 4 boxes worth of drawdown, right? So if the market drops from the current high, 4 boxes worth, that should be all I can afford, right? So that's a measured environment, and I'm trying to spread my risk where I see fit, right? So it's really anti-martingale, right? Where martingaling is adding more risk as you get into deeper trouble. What we're doing here is spreading the risk evenly as time goes by, right? We're building a position. Ultimately, the goal remains the same, right? It's an average outcome. Okay, so let's see if we can start closing some winners. The idea here is to find support. Once we have found support, we will have a bounce, and the bounce will close some of our trades, right? So what we're doing is testing support. We're making assumptions, looking to our left, right? Looking to our left, we're looking for that support, that possible support, that area that should offer price an opportunity to bounce, right? So once we found support, we will know we found it because the price is moving up, and it's moving up because of demand. Okay, so it's cause and effect. Right? It just goes around to the axioms that we exploit on a daily basis. Right? The top 3 axioms that we use in order to go through our process. Let me bring them up here on my other monitor, and I'll slide them into view. Right, so this is what the strategy is built upon right here. As soon as it comes up, there it is. I mentioned that in yesterday's video. Right, so we're using these axioms in order to make money, in order to manage risk, and in order to manage the trade in general, right? So it's an environment created by core patterns, and we therefore have reaction to these core patterns. And this is what we exploited yesterday, slowing momentum down. And that's what led us to believe yesterday we needed to be bullish, and it worked. And today we're taking, I think it's axiom number 2. We're expecting axiom number 2 to provide us our way forward for the next hour or so. Axiom number 2 being, let me zoom in, right? A trend starts with the failure of support or resistance. And that's what we're trying to see, right? We're trying to see being bullish. We want to see the failure of resistance here, 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 and ultimately we are trying to get to this level here, right? And that level, that red line is not some random red. It's not some random level. It's a Fibonacci, right? So if you're asking what the goal is for today, the goal would be nice to get up to 61%. Somewhere between 50 and 61 would be awesome. That'd be a good place to go to. And that should fulfill the average daily range, right? So it's a clue that builds upon a clue that builds upon a clue. Ultimately, I'm just trying to get to here, right? Somewhere in this zone here, somewhere in this zone. And then they pull back, right? So anything can happen. It can fail on the way. It can fail right now and go the other way, right? So therefore, we create alternatives, and we have plan A. That's how I make my money, 3 pips, 3 pips. But I also have plan B, right? How I build the position, how I exploit the environment. Plan C and D and E are all there trying to fix plan A, right? When I'm not making money, I'm fixing the trade. Right here, right now, we had an opportunity to take an entry on that red candle. I missed it. I'm just going to wait and see if it retraces. All right, if I see a little bit, ooh, right there, it was red for a microsecond. You have to believe me. There it is again. If it shows up red one more time, I'll click it. Boom. I'm trying to buy stuff when it's cheap. And today, particularly, I'm a buyer. And so I want to be buying on red candles, right? And the best time to be buying on red candles is when it's at support, right? And that, by definition, right, buying at support is axiom number one, right? We are testing axiom number one, buying at support. And if it is support that we've just found, we know we found it because there will be an upward move in price caused by demand, right? So if this is support right here that I buy into right here, right now, if I'm buying support, I will know this is support in a few minutes or seconds if the price moves up from here. Right. So I'm testing an assumption, right? The assumption is this support? My test is microscopic, right? I'm using 2 microlots to test my assumption. And if I'm correct in my assumption, I make something in the order of 47 cents or so, right? It's a cheap test of a educated guess. Right? It's testing an assumption. And I repeat my assumption over and over and over and over and over. I repeat the tests over and over. And ideally, I'm trying to recycle the same trade many times, right? So I want to see the same trade close so that I can reopen it. Instead of adding to the risk, I just want to repeat the same risk, right? I've mentioned this in all of our previous videos, but it's important to keep repeating it to ourselves because I'm not here to make $1 million. I'm here to not lose what I start with, right? That's the primary objective. The secondary objective, the byproduct of rule number one is making money, right? But rule number one remains the priority. Here I am back in the second box. This affords me an opportunity to spend money, right? So I put 2 clicks there already. And I'm waiting to see if we go a little bit deeper, and I'll take a third. And that will save, I'll save 1 or 2 for even cheaper prices. Right, so we have the ladder on one side. We're now testing the rungs on the ladder, and we're expecting to start climbing the ladder, right? That would be the probability that I'm trading off of. If the facts tell me otherwise, so if I start going down the ladder and I go down, 3, maybe 4 rungs, I'm out of money, right? By the 5th rung, I'm now touching my stop losses right here, right? So it's a measured environment, and I'm content to operate within those boxes, right? There's no panic, no stress. It's designed to enable me to do this. Right? I'm just now looking to see if I can recycle some of these trades. We are at resistance. If we go back to that daily, right? If we go back to the daily right here, and we're expecting to test support here at 61, right? We've been in this area for a couple days, good enough for government work, so to speak, about 10 pips away. What's the ultimate goal on the upside? I'm looking at the 61, between 50 and 61. That's what we're trying to get to. As we speak, we are pushing against 38 right here, right? Where today's candle is threatening 38%. We need to get through 38 to see 50, right? So that wick that we have right here in front of us, that's the opportunity that we're exploiting, right? That's what we've built our position into, right? So the wick, the price coming down on the current wick is what is enabling us to spread our money, spread our risk. Okay, so now that I'm back up into the upper box, I'm spending the click that belongs there. So I'm up to 8. Okay, so all we're trying to do is position ourselves in that wick right here, expecting the body of the candle to grow bigger and to make our money. Right? The body of the candle is what will be closing our trades. Right? We're exploiting the wick to spread our risk, to spread our margin, and then we're waiting for the market to, deliver the outcome. Right? We postpone gratification. Let's see what comes next. Right? The willingness to spend is there. The plan B, C, and D are there to support plan A. Right? So how do I fix this if it's not going up? Right? That white line right there, that's my exit. If I can get above this white line, I make money. Right? That white line, I can move it by closing losers or closing winners. Right? I can engineer this white line. Let's see, we want to see this push up. The daily candle, so far 16 hours, 16 and a half hours, has been contained to 35 pips. The day is only 35 pips. What's happening with the rest of the missing pips? So we have to have a plan. We have to have a probability. The probability comes from the top down, not the bottom up. And so we're following the rules in a certain sequence, right? It leads to clicking the mouse in a certain direction. The top down is not opening the door to more problems. It's supposed to filter the probabilities and leave you with the best of probabilities, right? So by following this top-down process, you're left with a higher probability outcome. You have filtered away what should not be happening. And so when it does start to come to fruition, when it's happening in front of you, this is not right. Deal with it. Instead of praying and hoping that it goes away, you can actually, understand what's happening and take the proper action. Right. So here we are recycling a bunch of trades. 1, 2, 3, 4, 5, 6. Let's open another. So that's 7. And I have 6 already open. Right. So we're just trying to close a bunch of winners in the next 30 minutes or so. We'll have had our 20 or 30 trades for the day. And we can then move forward to our next activity. We're not trading all day long. That's a big, big, big no-no. Right? So if we assume this is a low right here where my mouse is, I'll remove this box, push it aside. I'll take this box here, put it on that swing low, and then watch price behave as it's contained to this box. Right? According to this swing low right there, the market should and is capable of doing 9 pips right up to there, right? The market should and is capable of giving us 1 full box. That's all we're trying to do, right? We've lowered our expectations as low as they can go, right? Boom, just like this, in and out, right? So we've had all our winners done in 26 minutes. We can almost call it a day, right? But because we're here to do a job and my average is, usually a little bit more than this, I'll keep on trading. right? I do have a few hours left on my schedule that have been allocated to this. So that's what I'll do, right? So I'm positioning, I'm planning here, right here, where I need to take a trade, right? So in this area, I know I want to participate. Right? And then I do the same thing a little bit further. Where else do I want to take a trade? Oh, maybe right around this zone there. And maybe I'll take one down here. Right. So now we're waiting to see opportunities, right? The price has to be cheap for us to buy it. We don't want to buy when it's at the top, when it's expensive. Right. So we're waiting to see if it breaks into this box, which it's doing as we speak. If we have that break, a retracement or a pullback on this current candle, right? So boom, right there. Right. So I put 2, 3, and there's 4. Right. So I just put all 4 clicks on that red candle there. Right. Let's see if we continue up. Right. If we go down into this lower box, if we go back down into here, that will offer me or afford me the clicks that belong in that lower box. Right. So I just spent the 4 clicks that should be in this upper box. And I put them on what was a red candle. There's the 5th click right there. And that's it. Now I'm done. I cannot spend any more money up at the top, but I can spend money down here. Right. So I'm just trying to spread the risk and see it recycle. I want to see my trades close so that I have the opportunity of reopening them. And it's not a 1-for-1. Sometimes I'll close 2 and I'll only reopen 1. Sometimes I'll close 1 and open 2. Right? A lot of discretion is allowed here. And a lot of that comes with years of poor judgment. You learn from making mistakes. This is the only way to learn this game is to actually trade, is to actually make the mistakes, lose the money, feel the pain, take the notes, remember what hurts. It's kind of like the story of life. Right. Right around here, you want to be buying if you presented an opportunity to, right? A red candle. Boom, like so. 1, 2. I'm going to save 2 for these lower levels. 3. All right, so you'll notice that white dotted line is coming lower every time I spend money. There's 4. And I'll save number 5 if we come lower. Right, I'm just trying to keep maneuvering this break even. I'm trying to keep it within arm's length, a box or half a box away from the current price. Right, the distance between the current price and that white line is the drawdown that I'm carrying, which in this case is $2 on a $4,700 account. So let's see if we can close some of these trades. Average bars right now are only 2 pips on the 1-minute scale. And we're targeting 3 pips every time I click my mouse. And so by definition, I must wait more than 1 bar to make my money. And that's kind of what we have been experiencing. We trade at this specific time of day. to maximize the size of the bar, right? To make sure we can guarantee our exit. Here's just about ready to break even. And then we'll start closing some trades. All right. Ultimately, we're looking for a high near somewhere 810 or so. Another 3 or 4 boxes up from here. And then we want to be sellers at that level, right? Around 810. So we're thinking up here, right? We want to be sellers around here. Looks like we've just gotten the oil news. All the oil news came out. Closing some more winners. And then if we can see a red bodied candle here, rejection in the making, we want to buy it. Right there. There. I'm just recycling the trades that closed by themselves. Right there. Right. So I'm back to the same number of clicks. Now I wait. Right. Time of day has me positioned right between the hours of 8 and 8:30. I exploited a pullback. Right. This was a bullish move. Oops, sorry. This was a bullish move from bottom to top, right? And I exploited this little move right there. And I made my money on the next leg. Right? We build a position and we make our money on the next leg. There's a red candle. Take a trade if you can. Right? And you'll make your money on the next leg, right? This. This is what we do. It's like playing chess, right? We position ourselves for what will come. It's a probability assessment, and with practice, you become better and better and better at assessing these probabilities. And at some point, you start to put money on those probabilities. You start making money because of the probabilities. The law of large numbers will support the work that you do. Right? It will prove you're right in the long run. Right here, right now, take that trade you can. There you go. Francisco's already done half his daily goal. Right on. This is it. Know when to quit. You don't have to do more. You don't have to do, you don't have to overstretch. You don't have to reinvent the wheel. Just make it go around. This is what we're trying to do here. And we're using space and time to make money. Right? Space to you and I is up and down, right? It's the vertical amount of space on the chart. Time is horizontal. And we've been misled, right? We've been told to not worry about the x-axis, just wait. But when you're just waiting, you don't know what you're waiting for. And you're seeing many, many, many 3-pip trades go by untouched. Just think of all the 3-pip trades that you ignored until you ran into me. Right? So yeah. I'm willing, able, and capable to go fish at any time, anywhere, but I understand where the best fishing is and when the best fishing is. And so I limit myself to fishing only those best times. Right? It's limiting the risk. So we've just closed a couple more winners. A red candle, I'll repeat 1 and 2. I'm just repeating the same trades that I just took a second ago, or the ones that closed a second ago. Right. Ultimately, within the next 20 minutes or so, or maybe sooner, looks like we might be done. All right, so there we are, red candle. I'm reopening the same trade. Oh, I was late. I was late to reopen my trade. Okay, so uh, we've closed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 17, 18, 19, 20, 21, 22, 23, 24, 25. Oh, about 25 trades or so, 26 trades maybe. Here we are back to support. I'm reopening 1 and 2. I have 2 boxes on the chart. I have 4 clicks per box, so I have 8 clicks in total. I don't want to be borrowing from Peter to pay Paul, so I'm trying to put the clicks where they belong, but specifically in the boxes that they belong to, right? 4 and 4 if I can. Right, so if I can come down here, I'll put trade number 5. Like I mentioned earlier, I have 4.5. And so I round up. Right? But I want to see the trade before I click it. Just the kind of stuff we want to see, right? We need volatility. Apparently, the daily candle is very anemic, from what we've measured, and we're looking for a destination. It'd be nice if we could get even partly there, just a portion of the way. Here's a red candle, back to support. I'm clicking. Right, so now my white dotted average line is like 3 pips away. We're just about ready to break even. If we can get our way to the top of the box there, we'll call it a day, and that'll be, a 40-minute trading session. Enough to grow your account on a daily basis, change your life in a matter of a year or so. All right, so sustainability, repeatability, that recycling, all that good stuff. It's built into the system, right? By forcing you to slow down, by forcing you to not overclick, overspend, overthink, overtrade, all the overages get us into trouble, right? With this little box, your brain slows down. Your brain is in the box. It's contained. It's got a security blanket all around it. And you have a job to do on 3 sides. And it's the same job over and over and over. And so we're not reinventing the wheel. We're just learning how to make it go around. Close a few more trades here, and hopefully we'll be able to call it a day. All right. The goal for those of you that are still trading after this live session. So the goal on a higher time frame. Let's go check the hourly. For those that are here for maybe 1 or 2 more hours, right? We're still trying to get to that 8,000 area or 800 area, right? And then anything above that, we want to sell, right? So between these two red lines, you're sellers. And ultimately, you're selling because we think it will come back down, right? But it's to get there. Trying to get there is what you're trying to do 3 pips at a time. You have a goal, right? You have a destination. You know where to sell, right? This is why I highlighted in red. The destination will make you money. And here we are, done trading. Let's take a picture of this. And we are finished. We'll call that a day. All right. Enjoy yourselves. I'll see you guys tomorrow. Same time, same job to do. Bye-bye.